back to Block TV. It is time, Anchor speaking, right me. Yeah, it is time for Blockchain on Booze, where we gather professionals, wheelers, dealers from the sphere, or so they claim, and give them a lot of topics to discuss with us and see if they can maintain the straight line while keeping sober. Now, today we are graced and very, very happy to have with us Adrian Daniels, partner member of high-tech cryptocurrency and blockchain and venture capital groups at the firm of Yigal Arnon & Co.
I'm very talented.
No, clearly. Aviya Arika, now to the brains of the panel. Aviya Arika.
And what else? And what else?
Exactly. Innovative law, not only that, anything and everything blockchain and legal. And Itay Elizur, COO at Market Across, also known as the man who dresses like Johnny Cash. Now, let us.
Wow.
And called Sue.
Okay.
It is Thursday, folks. Let us take the first topic of the day. The 3.4 million, please pronounce it for me. Wabi? Wabi, okay. The 3.4 million Wabi Prime sale shows investor enthusiasm remains high. I want to read you guys the following paragraph. The Wabi Prime successfully completed its first initial exchange offering, IEO, this week. The sale concluded in a matter of seconds, raised $3.4 million. That's ridiculous, proving that investor enthusiasm for the new token sale format isn't confined to Binance Launchpad, which is what we discussed last week here, actually. So, question to you guys. Are IEOs the new ICOs? What makes them more appealing? Is this just yet another, I don't want to call it scam, but will this end like the ICOs of 2017? Itay.
Okay, so first disclaimer, Binance are clients and BitTorrent as well, and also I worked with this specific project that IEO'd on Hobby. So let's put that aside.
An ethical caveat.
All right.
Beautiful.
So yeah, I think IEOs are the biggest thing right now. Everyone's talking about it. There are pros and cons to it. It is the new hot thing, but it's how ICOs should have been in the beginning. So these are quote unquote reasonable amounts of funds, $3, $4, $5 million, not $100 million for a small part of the tokens. Where until now, project were saying in an ICO, I'm going to sell 70% of my tokens. Well, no, sell 4, 5, 6, and if they're gone in a few years, you have to close the company, and that's what should be happening. There's liquidity from day one, which is important because there's a lot of things. Will this project ever list? Will it go? Whatever. So there's a lot of things. So I think, and most of these are much more baked projects. So you had BitTorrent that ran on Binance side. That's a huge project, company. You had Fetch AI. It's a 4 or 5 year old company. You have again Top now, which is a bit more of a formulated company. So yes, it's a better way. But there's still a lot of problems. You still have a lot of manipulations on what happens in those first hours. So Hobby and Binance are top places to do this, but platform number 36 that's doing an IEO now that I talked to a project saying, oh, we know we're going to sell in 75 minutes. See, how do you know that?
How do you know that?
Oh, because we have an order to buy everything that's left on minute 73 and a half, because we know that in 3, 4, 5 hours it's going to be worth more.
See, that's scary to hear. Not only that, let me just play devil's advocate, or you guys feel free to jump in.
I want to say something.
Lead devil advocate.
Okay.
This. Yeah.
First of all, I want to give my legal take and market's take on that. First of all, in terms of the market's perspective, it's interesting because I'm not aware of any mix between primary and secondary market yet, and this is like a whole new thing, mixing the investment bank role with the exchange role, which is interesting, but raises a lot of red flags, conflict of interest potential, manipulation potential, and I think regulators are going to be pissed at this in a few months. So enjoy the ride while it lasts.
Not only that, I do believe that IEOs were actually, it's kind of a Chinese invention that was
invented
to circumvent, to circumvent the ban and actually
exactly. No, and it's crazy because here you have something that sort of circumvents, the STO obligation these days. And okay, let's have the exchange as the counterparty, but still, there are advantages. It's safer for investors because the exchange screens and filters the projects. The exchange is more lucrative and solvent than project owners usually. But is the exchange liable if the project fails? I don't know. A lot of legal questions of liability.
That's why one has to assume that they will try to keep to a minimum, at least in the initial stages. I agree with you. What will happen, 40 exchanges down the line when some exchange we've never heard of does an IEO. But for now, the big exchanges have their reputations at stake. So I think there's no doubt at all that for the time being, for these early strikes with the IEOs, we're going to see good companies doing good stuff. which have a real business, which are proper investment potential for those entering the game. Having said that, but just to the legal point on, we haven't even touched the securities question yet. I mean, that's everyone's kind of forgetting about that, and obviously all of these offerings are all going out, I'm assuming, to non-US investors right now. So we're kind of completely keeping out of the game the biggest chunk of potential investors
business,
here.
yeah.
So it's nice. It works. It's better than it was before.
It's going to have a better batting average than
exactly,
I saw this thing on ICO bench. I clicked on it and I sent them Ether. So it's going to have a higher percentage of, as I said, as a batting average. But yes, as everything that we know in this space, it's a good idea that if we don't regulate it or self-regulate it, it's going to be completely tarnished in months.
And you know what? And Binance, they came out with their lottery, they're going to come out with the lottery style token offering. I think that now we're at the stage, and this correlates with the whole
kind of a proof of
blockchain
stake
market. It's another step in the evolution of token sales, of fundraising.
It addresses
through
the issues,
tokens.
the biggest
I don't think it's the final one.
No, exactly. Probably not the
evolve.
final one, but I'm asking you because this puts the onus, so to speak, on the exchange, right? This new method. And this
in the case of Huobi, that's not the case with, I think, Binance.
But
Binance
not.
Binance was simply a platform upon which
Huobi is part of
BitTorrent basically
exactly.
issued.
Huobi is so Huobi Labs as the accelerator kind of worked with Huobi Prime. So yes, the Huobi's involvement in the first project is larger than, let's say, Fetch AI and Binance, but no one says that that's going to be, the end of it. So who knows?
Can the market, though, afford another explosion, like what happened with the ICOs? And also, apropos on the heels of not very good news in the last 10 days with all the reports, I'm not just talking about the, the research submitted with the Bitwise ETF to the SEC, which was coming.
Oh, she reads round. She's good.
Knowledgeable.
Thank you. Remember, you're on the wrong side of the desk. Yeah. But
not for long. If he's
not for long. Don't care. But that said, when it comes to the fact that it's no secret that most likely a lot of this business, when it comes to volume, is manipulated, is BS. And can it suffer on the road to regulation? Because I think we all agree regulation is needed, right? It's going to be needed for it to mature.
Not if you're a purist, but if you're a realist, then
yeah. Are you guys purists, by the way?
No,
never.
Realist.
So there you go.
Harsh realist.
But
without regulation, this is an unbanked industry. As long as it's an unbanked industry,
you'll see.
No one's going to touch it.
There's no viability. It's irrelevant.
It's irrelevant. And so just predictions on how this IEO market will end. What do you think, guys?
I think that someone in the SEC will say, hey, what are you doing? This is no way to do this, and this is not okay. And if you want to do it, you'll need to get a broker license. You'll need to get all the licenses, and you'll need to get
you can get one in the Cayman Islands.
Yeah, but then you can't sell to anyone in Europe, in US, in any normal market. Cayman Islands doesn't let you sell to anyone.
Oh, okay.
Except for people in the Cayman Islands, which I don't know how interested you are in selling to them.
I've met a lot of Caymanese.
But, I don't know, but it's not that.
I mean, we're going to see a lot of, sort of dovetailing of, you're seeing right now European legislation on the regulation of exchanges, and that's going to come into this, and
we're getting to
then they're going to have to kind of deal with the IEOs that way, and then the exchanges are going to have to adapt and make their IEOs compliant with that. So I think we're going down the path of to a place where it will be a regulated form of investment. And ultimately, I suppose that's where, again, if you're not a purist, that's where we need to be.
But regulation doesn't make it more normal. Look at Lyft. Just filed for an IPO, $25 billion. Their referendum says, we might never ever make money. I checked that. Dropbox said the same thing. Snapchat as well. So legislation doesn't mean it's not going to be bubbled.
Exactly.
Legislation, but regulation does manage to attract more people.
I just
at the end of the
think
day.
What's going to happen is that they separate the entities. You will have the entity that does the investment banking part, whatever. They're going to have to get some kind of a broker license. Then you have the exchange. They're going to have to get an exchange license, ATS or whatever. And I don't see huge new regulations coming into the picture. It's just the companies, I think, will adapt. and sort of separate the entities in a way that they'll get existing licensing and
But to kind of answer your question
Great,
about
me and two lawyers.
Okay, so I'm now giving the non-legal answer about whether
Peanut gallery, yes. Go ahead.
the bubble, does the industry need another bubble? Is this going to result in a bubble? Thank you. And the answer is, first of all, we can see by the amounts raised here were, the fact that we're even talking about, ICOs,
right,
which raised $4 million. A year ago, or a year and a half ago, no one would have even, it wouldn't have even made, the pages
a headline because it wasn't 100 billion.
Because it was simply irrelevant. So that's already very telling. Now, will this number go up and up and up as people get excited for a short period of time about IEOs? That's a question. But I suspect that given that the market has got a little bit more sophisticated, given that we've seen a lot more failures, given that people are that much more cynical and cautious about new stuff when it comes to altcoins and cryptocurrencies, I suspect we're not going to see a bubble. We might see some kind of small bubble, but we're not going to see anything like
nothing like what we saw.
First of all, BitTorrent was the most well-known IEO, and again, as a disclaimer,
and it was
clients of mine,
$14 million, wasn't it? I mean, it was
but they're already top 20 tokens, so you do look at that sale, right? They were able to get into the market and do something that
capitalizes on what
some
they
kind
have.
of sustainability, at least in our space.
In a world where nothing means anything right now.
Another thing, I think the exchange, the IEO, allows for, again, retail investors to come back into the picture, where we had them in the picture in the ICO craze.
In 2017.
And then they disappeared. Now they're coming back, and this is good for the market because it accelerates the market. No market is viable if it relies only on institutional and accredited investors. So this sort of changes the picture, brings the retail investors back into the picture, and I think we're going to see maybe a rally.
A lot of them are rigged. A lot of these ICOs are kind of rigged.
In either way you look at it, it gives the option to retail investors to even, even if they don't get into the
they
thing on time.
felt like they're going to get,
Yes.
They can buy it 200% up later in a few minutes.
Yeah, exactly. And
then
they're psyched about it. Then you go to the secondary market, to the exchange. They trade among themselves. They're back into the picture in a bigger way, which is interesting.
Which is what you need. No, guys, it's time for Benny, the blockchain bartender, just because I'm seeing empty glasses here. Before we move heavily into regulation, because Adrian here, the very capable man.
More regulations.
More regulations. Throws up the game. Benny, the blockchain bartender.
Give me 40-page.
Benny, who was, I think, on assignment last week or last time you guys were here. Really? We finished the whiskey? Are you kidding?
Next.
Give me the wine.
Where's the new bottle?
We've got another one.
I take the blame.
And
ragtime.
Now, it's fitting because the fitting music of the Sting for you guys, for those who are recognizing the soundtrack of the movie. New EU regulations put an end to buying Bitcoin anonymously. Apropos regulations, you're saying Europe definitely jumping on the on that train, or trying to. Localbitcoins.com announced this week that it implemented new measures to satisfy the European Union's EU 5th Anti-Money Laundering Directive, also known as the 5AMLD. The changes / regulations by the EU came into force on March 18th. And Local Bitcoins is the first, they jumped on that train immediately in Europe to align its business with it. Firstly, let's talk about these guidelines. They strip away anonymity.
Oh, come on.
Anonymity
is such like an unrealistic
I'm
dream.
with you, but the evangelists of this business.
I'll let the two lawyers
nobody
speak.
Can say
I'll just
anonymous.
do one thing.
Yeah, please.
Before they all take it. I'm for all this. The only thing that I'm afraid of, and I'm seeing a lot of trend of that, is we see now people coming to us. Again, we don't do OTC, but we have a lot of people that we know that do. We want to buy 1,000, 2,000 Bitcoin. We want them minted. We want to be the first people to touch them from the miners. Because of this, there's a big scare that there's going to be a situation where any Bitcoin that touched anonymous hands ever is going to be considered
tinted.
Tinted, and there's going to be clean and minted.
It's a legitimate concern.
So that's my problem. If they're going to say, oh, there's a sneak thing now, so everything until now.
And what happens to the tinted ones is the
question.
They go to hell.
They go to the dark web.
What?
They become useless.
No, I think that this is a good thing if you don't go and say anything that was bought before this regulation is blood.
Which is already becoming a thing, obviously.
So that's the thing.
I think we're
Take it away.
maybe following this, there will be like two markets: the dark market and
don't they already
exist?
Market. It's kind of
yes,
now
they can exist.
Even
people who are in the dark market, they know the risks they're taking.
But in time, the dark market probably is going to fade away if you just make everyone expose themselves. So I think the anonymous thing was nice for the juvenile crypto market.
And you might be right, but that juvenile crypto market, some will say, we're the evangelists of this market.
Yeah,
that
but
was
we
the
have to move away from
behind
it.
the original white paper.
It's time to move on.
The whole concept of decentralized, anonymous, trustless, and all that all gone down the toilet.
Naive 12-year-olds.
By the way, I don't see anonymous as a top value here. I think that decentralization and different governance models have nothing to do necessarily with being anonymous.
Privacy,
and you can give power
in the United
to the
States, there are
people
people that will argue with you that privacy, anonymous,
privacy
it's an open ledger. Where's privacy?
I agree with you, but they consider it a human right.
The ledger, that doesn't
exist
anymore. An open ledger just means you see a wallet. It doesn't mean you see a person.
It's a forgotten dream. Privacy. What is privacy?
Privacy doesn't exist. We consider that okay, but there are those. That's what the market was trying to regain. People owning back their data,
my only personal concern with more regulations is that they will become the old and the new, and the tainted and the clean or whatever, and that will.
So glad you got that word right now. I didn't want to say anything before, but I'm glad you got that right now.
Yeah, tainted.
Tainted, not tinted.
Tainted. Yeah. Thank you. You're right.
Thank you.
No, thank you. No, feel free to correct.
I'm a Texan, but we do know some English. Us Texans do know some English.
It is hard when one speaks.
Tainted
love,
right?
Yeah, so that's
you are natives.
Regulation is good because in any way, also there's regulation in the normal world. Weed is not legal. Go downstairs, you'll see everyone smoking weed. So you can take the highway and not the highway.
Thank you, human.
Yeah, you need to create a highway.
You need to create a highway, but the original idea, and look, privacy.
No, but no AML and KYC it's far beyond legitimate in any sense, really. Anti-money laundering has become a consensus everywhere in any industry.
But surely the point again, we're kind of getting a bit theoretical and philosophical here. But wasn't the whole idea behind originally cryptocurrency?
I disagree.
We were supposed to take out the need to do any of this stuff because it was all trustless. We didn't care.
I don't see anonymity as a top value for blockchain.
I mean, I agree with you.
But there's so many in the sphere. Look, if we had
values,
Vegan Nation here right now, she's not on the panel, okay? Rena, I think it's
Thomas.
She would argue you. I'm trying to channel her right now.
Yes.
To the point of no, this was the original idea, and people deserve.
Fine. Then you stay on your little militaristic, naive island forever and ever, and not grow the blockchain industry to where it can get.
Yeah.
That's it. That's what I can say about it. If we're not gonna experience some kind of disillusionment and understand that some values are easy to act on, and which is to me different society governance models and decentralization, that's doable, but you don't need everyone to be anonymous. That's
there can be standards. So I think that, again, I'm not as an expert as these people, but the issue, let's say, with banking is that not anyone can connect to the SWIFT and IBAN. There's a lot of process. Anyone can code his own Bitcoin wallet. So yes, if you want to play with the big boys and get your money to Bank of America or Binance, you have to have a declared wallet. But you can also code your little one at home and be part of that game. And so there is inclusion, but you can't get everything.
Point.
Exactly.
Yeah,
I agree.
It's called being an adult in some ways, in many ways. But wait, guys, because you actually moved us nicely along to Bank of America as we're passing to a different subject right now. I think those sound effects
are so perfect.
I know.
Cha-ching! Okay. I was thinking the exact same.
Bank of America tech chief, I love this story, is skeptical on blockchain. Wait, I got to read her her quotes, okay? On blockchain, even though Bank of America has the most patents for it. Okay, there's old school for you. For half a decade now, Bank of America has quietly been preparing for a future in which the world of finance migrates to the blockchain. Under Tech and Operations Chief Cathy Bessant, the giant bank has accumulated the most patents for the technology of any financial services company for inventions ranging from blockchain-powered ATMs to storage for cryptocurrency keys. But, hold and behold, this week, Bessant now says she's grown doubtful that blockchain, the distributed ledger software behind cryptocurrencies like Bitcoin, and I'm quoting, will amount to anything in the near term or possibly ever.
I just think it's taking longer than expected for blockchain to amount to what it can amount to and for crypto to amount to what it can amount to, and people are losing their patience. That's like the way I see it. The fact that Bank of America has the biggest, but it doesn't say anything because they're preparing for any scenario. They want to be prepared. They can't afford to not be prepared.
No
so
shit,
they got I don't know.
Like that.
Right, I mean, I wouldn't want to go head to head against Cathy Bessant.
Yeah. Besant?
I think Besant.
Besant.
I have no idea. It could be French.
I don't know, but you sound like somebody who knows.
Besant.
Go ahead.
I've always said Besant.
Besant. Okay, fine.
Isn't that like a Cuban song? She knows her stuff. I mean, she has worked her way up from the bottom, and I wouldn't want to go head to head with her. But I'm surprised that she would be so categoric. I'm assuming she's gaming the system a little bit with whatever she's saying. Because it's hard to really believe that she really believes that. I mean, we're already seeing use cases for blockchain.
Exactly.
Again, I kind of agree with her on the whole cryptocurrency thing, by the way. I'm very cynical about the whole cryptocurrency world.
You're of the persuasion that technology will rule.
I think the technology or bits of the technology are really, really relevant, and they are really going to change how things are done.
So is cloud computing. You didn't have cloud TV. You didn't have cloud conferences. So yeah, the buzz and hype has almost nothing to do with the technical application. And yes, if we only look at blockchain as a way to help banks do themselves, there's no reason for us to have a job and for this.
She also said that
It's not about the transfer of money, of value. Yeah. It's about far, far more than the transfer of value. And we're seeing use case. I mean, I don't know if you guys were at our crowd last week or 2 weeks ago. There was the CEO of the ASX was talking there, and how the ASX is basically transferring its clearing and settlement system called Chess.
Everything to
from Chess to DLT, and it'll go online in 2021 because he was. I mean, this isn't just a case. This isn't just a theoretical concept. He's basically saying the technology involved in chess, in the whole clearing system, in the whole concept of companies knowing who their shareholders are, how the T+2, T+3, when it comes to clearing a trade, is based on technology that's 30, 40 years old.
Yeah, but there's maybe 10,000 people in the world that care about what you just said.
The scalability is the issue here.
The point isn't just that we're talking about the ASX. We're talking about a large trading platform, which will be followed no doubt by other trading platforms, that basically says that technology is outmoded. The technology for future trading of huge exchanges with tens of millions, billions of trades daily is going to be on the blockchain. And you saw it here first at the ASX. That is a use case that I'm sure she knows about.
Yes, but
so the fact that she's saying what she's saying makes me think she's gaming the system a little bit, because there
disagree.
really is a Walmart, leafy green vegetable supply chain.
It might be, but I tend to disagree because there are use cases. The problem is, where is the scalability? We're not, I mean, she's right when she says that JP Morgan or Bank of America can't rely on blockchain yet because it's just not scalable yet. So you're right, but the question is for how many people, for how many transactions, for what kind of...
But I don't think, again, if we're talking about the ASX, I mean, that's pretty scalable. I mean, it's Australia. But it's a pretty major enterprise. Walmart is starting off with its leafy green vegetable supply chain management. That's a pretty, again, it's small-ish, but it's still pretty major.
But that's the thing.
You've got to start somewhere.
I find the scalability discussion, sorry, I actually agree with everything you said, but I find it kind of stupid. And again, I advise all my clients.
With all due respect.
No, when they come to me, they're like, oh, we have a new network. It goes to 11, and and I'm like, all right, but other than 2 days, because of CryptoKitties, Ethereum never got to 10% or 50% of its scalable options. So yeah, it can get clogged up, but unless we have a constant wave of transactions because there's people are using this crap, then all right. So I go to 11, I go to 12. I don't know if that's the big thing, but for banks, yes. For banks, it matters.
Fruity.
It's not the same. That's what I'm saying.
For banks, it does.
If you are Bank of America, you have a whole different perspective of looking at things. And yes, it's like a lion looking down at an ant. Kathy Besant, who manages I don't know how many tech employees
or
whatever,
JP Morgan thing,
saying that blockchain is not scalable because it's not scalable for that kind of scale yet.
Okay.
No, she was saying, I think, she can't see. She's saying it's technology in search of use cases instead of use cases in search of technology.
And now she's also carrying it. She says it might never happen.
And I'm not sure she's right about that, because
there really are
She does admit to being a bear in the closet.
No, I think that's like maybe a dramatization of things. Like,
Yeah, but also JP Morgan said the same thing, and boom.
And Boomy's got a coin. That's the exact point. I mean, are we to trust these people, or basically they're trying to disrupt the disruption?
Exactly. Well, or at least they're trying to look like they're disrupting disruption, so that they can then disrupt the disruption
and put out a coin. And speaking of which, all of this is happening.
I know, right?
That was very Yoda-like. But we're moving along. We're moving along. This is my favorite one. Okay. Consensus had this great blog the other day about the most common blockchain and crypto misconceptions. And apropos, I think people from the Bank of America make statements as such because the bulk of the population is not educated. Case in point, these several themes that a Consensus, obviously a Brooklyn, New York-based Ethereum-related development studio, important to note.
They own.
Otherwise, you wouldn't know it.
Yeah, they own
according to what they come out with.
So, because a lot of it has to do with scalability in Ethereum in a second. Okay. The first one. Here are their top picks. Many still equate blockchain cryptocurrency and cryptocurrency with Bitcoin.
Okay.
That's a sound so you know. Misconception, right?
Yeah, sure, of course.
Many still equate blockchain with cryptocurrency and cryptocurrency with Bitcoin.
Yes.
True?
Yes.
Okay.
Oh, what is blockchain? Is it that Bitcoin? Yeah.
Exactly. How often do you guys still get that?
People don't even know what blockchain is.
No,
It's just Bitcoin.
That's a good scenario.
It's just everything is Bitcoin. I mean, unfortunately, and this kind of goes back to what we were talking about earlier. That whenever the world of blockchain, altcoins, bisects with our lives, it's when something major is happening. And usually that major thing is crap. It's usually a hack or
a failed ICO
or the Quadra gap.
Quadrica.
Yeah, but people don't care.
Yeah.
It's none of people's concern.
Exactly. It's only when it's bad or crazy.
What they use. They don't care.
And they see the edges of it. They don't see what it's really about because most people still.
Yeah, but should they care? If we get to the point where they don't, where it's all happening, but
you know what? If we get to the point where they don't care, it means we're in a good state because it means that user experience is good enough and everything.
That you don't have to explain to them that this shit's going on, essentially, right?
Yeah. I mean, people talk about HTML. I mean, it's just
Remember the HTML days? Yeah. What is that? No.
I have no idea. I'm just letting people talk about it.
But wait, more use cases for crypto than that of Bitcoin, right? I'm mentioning in Consensus, I'm going to quote for you. Although the crypto craze of 2017 has clearly diminished, it has laid the foundation for a global ecosystem of tokens that proves that there is a lot more to cryptocurrency than just Bitcoin. True or false?
Yeah, so I talked about this when I was here, I think, the last time. And
please.
I'm a big believer in dApps. I'm a big believer in little microeconomies. They've just failed
until
now.
Is it dApps or dApps? I never know.
They don't exist, so I don't care. I'm kidding.
But they're not tainted. Yes, go ahead.
Or even tinted.
In most Western countries, bartering is illegal because bartering is not taxable. So there's a thing called a token where I can generate little value. It could be my haircut tokens or Benny the bartender tokens. I still really believe in that. That, I think, is a very cool concept. It has been misused by a lot of bad people. But that was the original idea, and I still think it is viable. We just haven't built that. But if that can exist, then there's no real use for cryptocurrency.
For cryptocurrencies. Aviya?
You know what?
Stable coins hedged by dollar, I'll buy a dollar. Thank you.
I want to get away from the Bitcoin crypto distinction and just look at it as, is it a store of value? Is it a means of payment? Because you either look at, so crypto right now, has several main use cases, none of which are being, realized.
Right.
But one of them is to really be like the gold or an investment tool where you stock up some money and no one is holding it for you. That's nice. Or you can actually transact with it. We're not there yet, and we're not there yet. So I think that whatever happens will depend on the monetary logic that the crypto market adapts to. I think stable coins may sort of change this game because we're not going to get rid of fiat currencies. We're just going to have crypto based on them. And that's going to completely eliminate.
Think?
I think so.
No.
Unfortunately,
let me be the
I think
purist
so.
for a second.
As a means of payment, or because
I want you to be a purist.
It can't be that you bought a pizza and now you could have had $3 million if you hadn't bought that pizza. That just makes no sense.
It makes no sense for mankind.
And that's why pegging crypto to a fiat currency makes much more sense if we want it to be a means of payment. And we want to
for as long as it's as volatile, for as long as it is so volatile.
Yes, for as long as it is so volatile. That's why if monetary logic comes into the picture, not in the form of stable coins, then
but
it will change. But right now it doesn't exist. Exactly.
Be a purist. Let's see you.
So the big explosion of Bitcoin was post, I think, the last 2008 again, Satoshi or whatever. So we said, all right, something's wrong with the system.
Yeah.
Something's wrong with the system. We need to build something different. And now the best use cases I see are triple derivative exchanges and stable coins on diamonds. So we're just building the whole exact crap that we thought is bad for us.
Way.
Exactly, and we're just doing it on a tokenized way. So yeah, if what happens from Bitcoin is it's going to be the new economical standard for derivatives or whatever, then
we've done nothing.
Crap in a bag.
We've achieved nothing. Right.
Yeah.
Right. Well, we have achieved something, which is just better.
New money that a few of us will hopefully have in our pocket.
No, I think maybe more efficient technology.
No, the next one is fascinating for you guys. Apropos misconceptions about cryptocurrencies. I want to move us ahead to that because we're doing so fabulously that time is going by like honey, like whiskey honey.
Honey.
Do you guys know the Howey test?
Yes.
Yeah.
Okay. Thank God. No, it's lovely to have people. Okay. So misconceptions about
Steve Howey, right?
Mm-hmm. Okay. 1946, by the way. Okay. That's how dated it is. Okay. From 1946, per the SEC website. Cryptocurrencies, they are also, other misconceptions about cryptocurrencies are that they're all securities and their issuance process should be regulated according to the Howey test. However, consensus teams suggest we should formulate new regulations to agree, because this one was invented in 1946, but they say that cryptos meet all the 4 rules for a financial instrument, or that one needs to pass that test, which is 1, it must be an investment money, with 2, with an expectation of profit, 3, in a common enterprise, and 4, with the profit to be generated by a third party. And in that respect, it feels like the SEC is trying to pigeonhole, actually, cryptocurrencies into that asset class.
So I think the biggest problem, and I have a few clients in the States, the biggest problem right now is that they're not doing any ruling. You have multiple, and again, the people are doing a great job on getting money from that are lawyers or whatever, but you have a lot of companies that are saying, yeah, we'll take any ruling right now, but just
to do something to regulate.
And we have let's say SALT, okay, SALT lending, they're regulated in 43 states on the state level, but on the federal level, they don't know what they are. And they said, look, just give us a ruling. We'll deal with that. We'll do it. We'll do utility. We'll understand how we do that. Security will do it. But we can't live in this limbo where we're unbankable or whatever. So
I think this year
the SEC is just sitting on the sidelines.
Really?
By the end of this year, because I feel like the SEC and the CFTC cannot
schlep along that,
let this slip any longer.
I suspect the opposite, actually.
I think that by the end of this year, we're going to see some kind of...
I get a sense that they are actually beginning to feel, and I could be wrong here, it's pure speculation, that this is a passing phase, and if they just sit it out, it will kind of burn itself out anyway.
When we spoke to, we had an interview with Dan Berkovitz of the. Let me tell you why I think this might be.
I actually tend to agree with you. A lot of shit happened in Israel a few years ago about binary and forex and now crypto, whatever. And they're like, Israeli government isn't really that interested in going after these people.
They love a status quo.
And they also love hundreds of people getting jobs, getting salaries, and getting whatever. And they also understood that it's going to be washed out as it is.
As the case happens in the status quo.
But a digital asset question is, I don't think anyone thinks it's going to be washed out. I think that the CFTC contemplating a rule change when it comes to custody of digital assets means exactly the opposite. I do not think that's the trend. I think they're taking it very seriously. They're just, as any regulator, they lack resources and they're always behind the industry. But I think that I totally think that this year we're going to see some kind of...
The year of the regulation.
Kik/Keen, American Israeli project, they have claimed that they have spent more than $35 million on lawyers until now, which is an insane amount of money because they just know. And by the way, there's still no ruling. They don't know their status.
Right. No, and that's the look. As I began saying, we had this interview with Dan Berkowitz, who's one of the commissioners with the CFTC, who was very adamant about how they are taking their time because there are so many bad elements within the sphere that they just are waiting for those to be weeded out. Which, Adrian, I have to say, I tend to agree with you because I think, within corporate culture, that's a great way of buying time.
Yeah.
That's of stretching time.
But there's no pressure on their end.
Yeah, clearly. Clearly there's. But hold on. Last one, apropos consensus, scaling through layer 1 and layer 2 technology stacks. In addition to widespread confusion about how crypto assets should be classified, various crypto community members reportedly believe Ethereum cannot scale. Consensus team appears to suggest this might not be necessarily the case because, and I'm quoting, some of the smartest minds in the world are currently working on solving scalability through layer 1, ergo's sharding, and layer 2, ergo's state channels plasma solutions. The contributors also claim, I'm going to disclaim that for them in a second, many of the Ethereum scalability solutions will launch into reality this year, and Consensus founder Joe Lubin stated at his SXSW Interactive blah, blah, blah keynote that the Ethereum network and with layered solutions in play will be able to handle millions of transactions per second within a year and a half to 2 years.
Yeah, we'll see. We don't know what problems we're going to encounter on the way to that.
Did he just jump over the...
It's consensus, okay. They are good people, but they have a clear interest, which is promoting the best interests of Ethereum, of the Ethereum network, and everything that builds on it.
Do you intelligence folks feel, because you're playing in the sphere, I know, that within 2 years we'll see that type of scalability?
I can tell you that right now, the bet's against them. I think that all the projects right now are trying to be what Ethereum meant to be. There's too many people and too many projects right now. And the problem is that because you're opening on an open code or whatever, so yeah, Vitalik should get a lot of credit. He invented or a lot of it, but people
I have a theory that Vitalik is Satoshi, by the way, and he just
Vitalik
created Ethereum so that nobody will ever guess he's Satoshi.
He's like 21, so I think that the years don't work together. But like, unless he invented when he was like 7. But
he's not from planet Earth.
But I think it's a good version 1, and people are building a lot of version 2s, version 3s, and right now I think that the market, there's too many people going against them, so their chances are slim.
No, Adrian, I want to hear from you, and I do think that the honey whiskey, I'm with you, it's awful, but it's terrible.
That's what it is, honey whiskey? That's what it's called?
I took a sip of it one day myself. But, better whiskey coming next week when you come back. That said...
I hope so.
No, you do, definitely. Yeah. That said, I want to hear your take on scalability.
You give a Brit some American whiskey.
American whiskey on its way, folks. But I want to hear your take, other than Vitalik Buterin, who, again, nobody listened to me, is the Night King from Game of Thrones, people. Think about it for a second. Yo.
The Night King.
Thank you. Ooh. Okay, but now back seriously.
I've never watched Game of Thrones.
Oh my God.
Leave.
It's accurate.
Okay. You've got a lot of catching up to do in a month.
Yeah, you got it. It's coming up. But we're distracting ourselves before we finish and wrap this up. What do you think? 2 years? Scalability? Millions of transactions?
I honestly have no idea. I would just say, because I also have to say something, that the way the world tends to work and this stuff tends to work, in my opinion, is there will be a whole different branch that will just make whatever is being said now in the sense of scalability in Ethereum, whether it's Lightning or EOS or whatever else it is, that will just make the whole thing, it will just take it, the concept behind Ethereum will just have to change. I mean, again, as a lawyer, maybe this is not really on point, but I think it kind of is. This concept of smart contracts, I don't really get it. I don't get how as a lawyer, I don't know how to draft a smart contract that will deal with every single eventuality, and every single event. And no doubt when you draft a contract, when there's a problem is when there's an eventuality that's occurred that you hadn't thought about. What are they going to do when that happens with the smart contract? I mean, how does it work? Does the server start to fry? I mean, I just don't know how it all works. So I just think we're looking at
there will be the International Court for Smart Contracts Enforcement,
run by an AI
or something.
Bot.
Yeah, exactly. How will that work?
I mean, so I just don't really get it still, and that's also because I just don't get it. But I just think that things will. 2 years is such a long horizon in this world.
Right.
Who on earth knows how or what or why what direction things will turn? I know that's not a terribly, wise or detailed answer, but that's just my.
No.
Let's see what quantum computing does to everyone.
The biggest thing, and I've said this on the show, that it has Ethereum against it right now is their corporate environment. So their Swiss nonprofit, whatever. It was a model that was done to get out of jail free card. But when you look at other companies, you can look at Casper Labs or whatever, which have the same kind of code or better. There's a CEO. It's a for-profit company. So right now, let's say when I advise projects and people come to me and say, "Oh, where you have a network that can go to 12," I said, "All right, that's cool, but you also have to show and explain why this is a business. Who are the people behind this? That's why Binance are doing well and Tron are doing well, because there's a business that there's a CEO, love him or hate him, that they're pushing this, and the Ethereum foundation and consensus model, I think." Business-wise, will not be able to survive.
No, also there is a misleading approach taken by Ethereum where everybody says that Vitalik is the only one that says that, oh, the Ethereum network doesn't depend on me, but everybody else thinks exactly the opposite. And there's a problem here, and that I think hurts the Ethereum network, but in a legally. But we'll see.
We'll see. Listen,
but that's actually a CEO thing. So of course, if Elon Musk tomorrow dies, I think on a rocket or something, Tesla has a big problem. And if Adrian dies, WeWork have a problem.
Yeah,
so
but it's bigger than that in Ethereum. It's even
more centralized.
Look,
more
it's
centralized, but at least
he died. But Apple went on.
Vitalik Buterin does not
there's
go.
Steve Apple here. Remember?
That said, let's hope he doesn't go to India and disappears. Ka-ching. Ladies and gentlemen, I want you to raise your glass and thank yourself.
North of the wall.
You have been amazing. Don't worry, I'm giving you something better to break off camera. Raise your glass. Thank you. Salute for being here. This was an amazing blockchain and booze. This was it for us as well. Don't forget to check us out, BLOCKTV, and any social network you have, Facebook, Twitter, Telegram, and we'll be right back.
Thank you.
What about Grindr?